Hi, folks. Welcome. It's good to have you with us tonight. This is part 6 of a 6-part series sponsored by the Small Business Center and Nash Community College. And tonight we're wrapping up the course, talking about taxes, depreciation, record keeping, and I'm going to share some secrets with you to help you close some sales someday. My name's Steve Carver, and I'm in Dunn, North Carolina, over in the center of the state on Interstate 95 and close to Interstate I-40. So if you're ever through this area and you want to visit, I'd always be glad to hear from you. I'm speaking to you from my home office where I operate CarverEquipment.com and other enterprises, and also our Academy of Entrepreneurs Associates webinars based on seminars out of here as well. This is my presentation number 1097 on my journeyman's trip into entrepreneurship, and I appreciate you joining me tonight and letting me join you as well. I want to tell you right up front, I am not a lawyer and I'm not a tax advisor. I'm just a fellow that's been in business for 63 years, since I was 12 years old. Have maybe over 2,500 employees, ran 6 or 7 different types of businesses from our base at Carver Equipment Company. Learned a lot, and I'm glad to share those lessons, good and bad, with you. And always, I'll say to you, my first advice is always get a second opinion. Bounce your ideas off someone who's got some sense and knows about your business. Excuse me. This is the old COVID cough. I'll probably do that a lot tonight, and I apologize up front. But the best places you can get good free advice, confidential, from folks who are really interested in seeing your business grow, is your local, excuse me, Small Business Center. And the one at Nash Community College at Rocky Mount is sponsoring our program tonight. And the director there is Ruthie, Holloman. She's been on the job for several months now and doing a great job. She's actually been doing the work for several years, but she's the new director and really doing a wonderful job. I encourage you to give her a call and set up an appointment. She's located in the William Carver building on room 8259 there. Got a real nice facility. We've got a full schedule that we're working with. If you'll check the calendar out here, you'll see that tonight we're going to be talking about taxes, and we'll close out our course our 6-part course. Tomorrow night we'll be closing out a 5-part second course that most of you have been attending as well. And it starts at 6 p.m. Then on Thursday afternoon, we'll be talking about how to price your products and services if you're available in the afternoon from 2 to 4. I hope you'll join us. And then we'll close out the year on December 11th at 5 p.m. with a discussion about how to turn your hobby into a business. So you're certainly welcome to attend all of those. Study guides that have been sent to you, if I had your email address, are on the screen now, and includes some that you've seen before. Wow, excuse me, let me get some tea here. There's one there that maybe you haven't noticed, and that is the quiz for this course series. 20 or 30 questions there. I sent you an earlier copy of the quiz with the answers because I want all of you to make 100 on it, but I must ask that you send back the quiz and answer the questions, because that way I'll know that you know the right answers to the questions and that your efforts here are bringing some good skills and tools to your tool belt for entrepreneurship. So when you fill out that quiz, make sure you fill in the answers, and make sure you give me your name and your mailing address, because we will mail the certificates to you, and I want the name to be printed on there exactly the way that you want it to show. So that's up to you to send that back to me right away. Also, probably tomorrow, you'll get a survey sent to you by email, and we'd appreciate it if you would fill that out and send it right on back in. Your homework assignments you've seen all along the way, and many of you have sent the assignments in, and many of you have attended the required 5 out of 6 sessions, and so you're going to be eligible for certificates of completion. However, only one of you so far has done a video, and that's LaToya, that will help you earn the membership into the Academy of Associates and Friends. So please work on those videos. It's very easy to do. You can do it with your telephone. You can do it on your computer. But it is really important that you learn to do your videos to help promote your business, because it is a 60% of marketing power in today's marketplace, and you just really need to do that to set yourself up to be ready to proceed with your business. So I need those videos from you. That's keeping about 4 or 5 of you from being eligible for Academy membership. So I've been keeping up with the folks that have been attending. LaToya and Saranki have got 100% attendance. Congratulations, and you're all with us tonight. So that's a good extra effort with you. Several of you have attended with attendance tonight. We'll meet the 5 sessions being present, which will qualify for you to get achievement awards. And but I'll still need for you to send the test back in. I've also got a lot of other people that have attended several, and we're certainly glad to have y'all on board and come when you can. And we'll have another series starting up in January that if you want to get on board for the whole ride, that you can kick back in mid-January, and we'll be doing it again. I'd like to mention the folks that have put in the extra effort so far this year in this series with LaToya over in Clinton. She's with us tonight. Thank you so much for your work, and thank you for what you're doing for yourself and for fellow entrepreneurs with sharing that with us all. And I'm really appreciating the efforts that you're making to promote your business. And Shwanky, thank you for your strong efforts. You really got active. You told me your business had been going on for several years, but I've seen your efforts in getting more information out there. And I assure you that when you get your videos on board and start selling these products in person, you're going to see a major spike in your business. If it's anything like happened to me when I started doing it, it's just amazing how much good it'll do you. Katina, same thing for you. Thanks for all your work, and you've really put a lot of hard work into making this work better for you during the past 4 or 5 weeks, and I really hope it brings you great benefits for your work. And again, I just know that your videos will do the same for you. Darcy's done a wonderful job with her work. I mean, she really came forward with some great imaging and put a lot of effort into getting ready to open up a florist business when she's ready to go public. We're going to do all we can to help her. So thank you, Darcy, for all you're doing, the extra effort that you put into it. And Tim, thank you for being consistently with us. Glad to have you with us tonight. And I hope that everything goes well with you and your Legal Shield work and other things that you're promoting and people you're trying to help. So I appreciate all that you're doing down in the Williamston area. We all need to say a special prayer for Regina. She was with us the first half of the series, but her father's been really ill, and she's had to take off extra efforts to help with his care. So we're all praying for him and for Regina, and look forward to seeing her back on board with us, hopefully in January. Your drill skills are one of the handouts that I've sent to you. We've covered all those last night. We wrapped them up, the 40 of them, but I want you to hold on to those. And if you haven't had a chance yet to watch the videos related to each one of the drill skills, please do that. They will really make a difference for you. I get reports every month or so on someone saying how much good they have done for them. Our topics tonight are fairly cut and dry: record keeping, depreciation, and taxes, and I'm going to try to share with you some secrets that'll help you sell more and be able to close more sales. So it's pretty exciting topics tonight, and let's just get right into it. Part one is going to be about record keeping. Record keeping is something that all businesses have to do, and if you've been in business a while, you already know this, because we're told that because of computers, our paperwork was just going to go away. We weren't going to have to cut down any more trees for paper, that computers were going to solve all that problem. But in reality, they've doubled the problem. Because now these printers, and they want to print everything, and a copy of this and a copy of that going to different people. The records are just amazing. So let me just advise you now, if you hadn't done so already, go ahead and get you a couple of stand-up filing cabinets, a 4-drawer filing cabinets. You probably won't go and get 2 of them if you can find some used ones, and oftentimes they're on sale. Facebook Marketplace is a good place to buy them, really inexpensive. Walmart has them. They're not a lot of money, but let me tell you, you want to keep your current files on one side and your tax important files to keep on the other side, because there's going to be a lot of paperwork generated no matter what business that you get into. When you have customers, you send invoices. When you pay bills, you've got paid bills you got to keep up with, and accounting records and profit and loss statements and checkbooks and stubs. There's just a lot of paperwork that's got to be kept. So go ahead and get you a place to do it neatly. I'd like to show you my office and swing around here behind the backdrop, and you see a lot of filing cabinets that I'm looking at across the way, but it is a total mess. I hadn't cleaned up this office in 2 months, and I wouldn't show it to anybody tonight, but that's the way it goes. But record keeping is about keeping up with your paperwork. That's kind of the easy part. However, keeping up with all the communications that we do and emails and files that come and go become to be quite a problem. So become familiar with, one, doing your business on a computer. Thinking you're going to be able to run your business on your telephone is not going to work. When your business grows, there's going to just be too much to do on your phone. And I want to encourage you to have a laptop and or a desktop. It's good to have both if you can, so you can have one set up on your desk all the time and carry the laptop with you. And if you have one set up on your desk, either a laptop or a stationary unit, go ahead and invest in a second monitor. That second monitor can make a world of difference in your proficiency and ease of operation in preparing documents and doing research. That way, when you have to shift over from into a project and the phone rings or something comes up and you have to go to something else, you can leave that project on one screen and it's there for you when you come back. So think about doing that. Become familiar with these little flash drives that you can plug right into your computer and save information on. They are a godsend and for new and old records. Lots of other ways of saving computer information online or in your computer to go with. I don't need to get into all that because just a lot of that. And now with the introduction of the cloud as they call it, to the computer world, that opened up a complete huge opportunity to save material. And there's even companies that will do it for you automatically at very reasonable prices. But as you move into it, you're going to need to save your records, the electronic ones and the paper ones. Some units, some documents you don't need to keep forever, as long as you're in business, as long as you're alive. There are things that have to be kept. It always has been, just like in personal life, your birth certificates and deeds and things like that. It's the same way with your business. Those permanent records are going to be kept in a safe place. Maybe the safest place, they say, is a safety deposit box, but there's a cost to that, and it's inconvenient to get to it. But depending on what it is, you'll work that out. But remember, when you're trying to save your records, your documents, whether it's in these filing cabinets in your office or at your home, find a dry place, a place that probably will not get wet, either from flood or plumbing issues or whatever. Think about keeping them dry, number one, and giving them fire protection as best you can as well. And sometimes, if you don't want to keep all this stuff at home, and it will build up, is to just go ahead and rent a very inexpensive storage building, and get one that's very affordable, that's not going to put you in any type of financial bind. Of course, you can put your other personal stuff in there too, but the best ones are definitely make sure that the location is not on any type the way ever it would be in a floodplain, and is good and secure, and hopefully there's a light nearby just to discourage people from breaking in, but mainly so that if you go there at night, you'll have vision to see. Try to not put it back in a dark corner where you always don't have to remember your flashlight, and a place you're good. And then when you go in there to set up your records, to start storing your boxes, I suggest you use these, what they call banker boxes, that have little handle holes with a lid on top that you can label them very easily. They're sold 10 at a time at Walmart at a very reasonable price. I think you buy 10 of them for something like $25, and you can put a lot of records in those, about the equivalent of a 3-drawer filing cabinet. So that's an inexpensive way to start. But when you put them in your storage building, put them on a table, put them on something up off the floor, so just in case, if some moisture gets around it, we won't get the bottoms of the boxes wet and seep up into them. So that's just some word of advice, because I've made all the mistakes when it comes to keeping up with your storage building. I went to the point one time, we had so much paperwork at Carver Equipment back in the 80s, that I actually built a big shelter outside at our equipment company lot, and put it up on stilts, and put a second floor on my shelter to make sure it would never be flooded for my records. Put those records up there, and I had the nicest, safest record storage that a person could ever have, and I was so proud of it. I showed it to people. I showed my insurance company what a good job Steve-O was doing with his records. Well, guess what happened about 4 months later? Here comes Hurricane Bertha, and blew my Fed away and sent my records all the way across Lee County and Harnett County. There's no telling who was able to read my records, because that hurricane put them in the wind and just took them away. And it just floored me and whatever. Anyway, my insurance did cover the cost of the structure, but they just laughed at me when I said, "What can you do for me for my records?" They said, "We suggest you rent a storage building somewhere on the ground." So at any rate, I did save a lot of money, but God, I really hope, and thank the Lord, I didn't have any audits during that period of time where I had to dig those records up. So that's why I'm suggesting to you, keep it simple and keep it safe. You want to keep up with those records permanently. They're mentioned on the slide here. Now, there's some records, however, that you just don't need to keep forever, but there is a legal obligation to keep them for 7 years. These things that are on your screen now are for 7 years. But I'm going to go ahead and tell you right up front, I suggest that you keep them for 8 years. But that's my suggestion to you. Because after every year, you'll get some things in the mail a little bit late after you've already boxed up your records and got them sealed up. You'll look at it and say, well, this needed to go in those tax records last year. And none of us are going to unbox and go dig them out of storage, but we will put that in our this year's thing and say, well, if I need it, I can always look to the next year. So that's why I say 8 years. But we don't need to keep accounting ledgers, bank statements, checkbooks, employee record files, things like that. And one thing I want to mention especially to you are bills of lading. Bills of lading. Maybe you're not familiar with that term. That is a shipping document. That's what that means, a shipping document. Excuse me. Showing that you have shipped something to another place by a certain carrier and someone else received it. It's important that you keep those shipping documents with your original invoices. And in today's world of all of us sending stuff out of state, there's a lot of things that you'll be able to ship out of state, and you will not have to charge the customer sales tax. And that will give you a sales advantage. So you'll be doing a lot of that as long as you can, as long as whatever you're selling comes under that criteria. But if the state sales tax auditor comes and says, now, why didn't you pay sales tax on this particular thing? And you say, well, I shipped it out of state. And they are simply going to say, well, prove it. And if you can't prove it, you're going to have to pay the tax on it. Okay? So it's good to have those records right there with your invoices to keep up with them. You also want to keep up with employee records. As you start hiring employees, you want to keep up with any records, especially related to the time they were hired and the time they were terminated, and any company policy signatures that you have there. Because if down the road they get wrong with you or have a problem or an accident and decide they want to claim something happened when they were working for you that is causing them to get a workman's comp claim or had some kind of injury or something happened like that, if you've got your employee files so that when they employment was terminated, you made notes on it, or when they got their last paycheck, you had them sign that they were healthy, no damages, kind of a release waiver to get their vacation pay or a termination arrangement, then that's going to help you, in any type of lawsuit or litigation that comes about. Because people will indeed, maybe just because they're mistaken, come up with some stories that you cannot believe of things that happened a long time ago and are blaming you for an issue that's going to cost you some money. So keep that with your documents in your normal business transactions. Is what these 7-year things are. So if you're doing a lot of business, you're going to have a lot of paperwork. And I'll mention this to you now that we live in an area that has floods, that has hurricanes, has tornadoes. And indeed, if we have that situation and it's really serious, the federal government may come in with FEMA, the organization that helps people out in disasters, and offer special low interest loans or grants or special considerations to small businesses that have been affected by the disaster. But every time when they make you an offer, they're going to ask you, well, prove to me what your damages are. Prove to me what your damages are. And that means you're going to have to be able to get to those records pretty quickly. And especially after a disaster, that's why I'm saying make sure you got your records, that you'll be able to find them, that they won't be flooded, they won't be blown away. The next thing I'll mention here is if they are offering you some type of compensation for profits that were lost during the disaster time, this gets to a two-edged sword now. We don't talk about tax avoidance, not to have to pay any more taxes than we do, and to show as little profit as you possibly can for that purpose, if that's what you're aiming to do. But you got to be careful, because if the person offering you a deal to help compensate profits that were lost, profits that you lost, then they're going to ask you to show them the documents to prove that you actually were making a profit at this point in time last year or during the last 3 years. And it'll be up to you to be able to have the documents to make that happen. Okay? So you need to think about that, what documents you're keeping and for what purposes and such as that. Now, we want to talk about the word depreciation. Have you heard that mentioned before? Well, of course you have. We've heard depreciation mentioned lots of times. It is a loss of money. But now we're going to talk about how does depreciation affect us as entrepreneurs, as small business owners. And now it becomes quite serious, because depreciation is a big item with taxes consideration. So let's talk about that a little bit. And understanding depreciation can be quite a challenge, because on the surface it's fairly easy, and we'll get into the surface area tonight. But you can keep digging and digging and digging into different families and types of depreciation and where these threads go throughout the business world, and it can just become mind-boggling, actually. You don't need to worry about that. What I don't teach you tonight is what you need to know to get started on the way. But I'm sending you a handout written by Lisa Borger. I searched the internet to find the best, concise publication that I could to help us all understand depreciation better in a deeper way than the few minutes I have to do it during a webinar. So Lisa had written a really good article on the internet, and I give her 100% credit for this, that I found to be just absolutely stunning, and I know it will help you. So take this handout, this study guide, and print it out, and at your convenience sometime during the holidays, get a couple of cups of coffee and read through it. That's all it'll take, so that you have a general understanding, continuing understanding of what depreciation is and how it will affect you. Now, moving into what we want to talk about tonight. depreciation is our subject. What is the definition? It's a reduction of the value of an asset with the passage of time due to particular wear and tear. We all know that the very minute we buy something, it's not new anymore, and therefore it's worth less, even though it hasn't even been touched. Just the fact that it's used has a depreciating factor on it. And when we're buying stuff for our business, when we're buying assets for our business, that becomes to be an important factor. The value of our business is all tied up in our assets, and as time goes by, as we have wear and tear on those items, the value of that asset will start to fall. Therefore, the value of our business falls with it. And we have to track that, because that's getting right into our pocketbook, because that has everything to do with the value of our collateral, our borrowing power, what we have to work with, and what we have to show our creditors or our vendors. So we want to keep up with that value as long as we have it, because it represents the value of our assets. Depreciation. So let's get into a little example here. Let's say that we're all just starting our business today, and holy moly, we got $10,000 cash money. We all went by Ruthie's office over there, and Ruthie's with us tonight. Thanks for joining us. And she just handed each one of us a check for $10,000 out of the goodness of her heart, and we all are going to come back home and start our business with it. How about that for a dream for the holidays? So right now, because of Ruthie's goodwill, we got $10,000 in the bank. And so therefore, our business is worth $10,000. How about that? Yes, it is. But we got to spend that money, because whatever we're doing, we're going to need an industrial saw, a big, heavy-duty saw, to saw lumber and different material to help build whatever it is we're selling. And that cotton picking saw is going to cost us $5,000. It's expensive sucker, isn't it? So we got $10,000 in the bank, and we're going to go use $5,000 of it to buy that saw we need for our business. All right, that's fantastic. But the question now is, because we used up half our money, is our business now only worth $5,000 because that's all we got left in the bank? What do you think? Yes or no? Well, no, that's not right, because that saw became an asset of the company, and it has a $5,000 value. So now we've got the $5,000 in the saw, and we got $5,000 in the bank, and therefore our company net worth is still $10,000. Everybody got that? It's kind of easy, kind of simple. But now we're going to kind of move forward, and things are going to change just a little bit, because the day after we bought that saw, it started depreciating in value. Now, the problem is that we would like to use that $5,000 because we took it out of our borrowing, out of our money. We'd like to write off, that is, not to have to pay taxes on that much money, because we put it back into the business. It isn't like we're using it, and it isn't like we paid ourselves a salary, and we're holding on to it as an asset. So the U.S. government, the Congress, the Treasury Department, the IRS lets businesses use what they call now depreciation. So it now becomes, with the new definition, depreciation is a way to take tax breaks on the items that you buy during the year. And on some items, and this changes year to year, some items they'll let you take a write-off over a 5-year period, or a 10-year period, or a 1-year period, and sometimes right away you can take it. Just depends on what's happening in the world and the economy and the politicians doing their thing. But there's generally always an option. Excuse me. I'm so sorry for this call, but please bear with me. So the write-off lets you take a tax advantage because you spent some money. That's bottom line on an asset. So we're going to take a 5-year write-off plan here. which means that each year that saw value is going to reduce by $1,000. So this year it's worth $1,000. Next year it's only worth $4,000. The following year that saw will be worth $3,000. The next year $2,000, and after 5 years $1,000, and then nothing. So what does that mean? You're telling me I got some kind of advantage here because my value of my saw is going down? Yeah, that's right. First of all, you're taking the value down because it's getting older, and that's called depreciation. You have to do that. You can't buy an asset and tell the whole world that it's never going to go down in value, because with wear and tear, things go down in value, and you have to be honest about that. Now, what do you think so far? All right, I bought a $5,000 saw, and in 5 years it's not going to be, or in 6 years, it's not going to be worth anything. That's crazy, Steve. My saw's still going to be worth about $4,000 anyway after a number of years if I don't tear it up. And that's true. But the book value, that's the first time I've used that term, the book value is what it shows on your financial sheets, on your depreciation sheets. And the fair market value that we talked about during week 3 and week 4 is going to remain what it will actually sell for on the market. So right now I'm going to start telling you, don't get confused between book value and fair market value. So here we go. How do we get an advantage from that saw dropping in value? Well, we're going to be able to take lower our taxable exposure by that $1,000 each year. Each year we'll get $1,000 credit towards the amount of money we have to pay taxes on. So we bought that saw, we're using it, it's making us money in our business, and yeah, our book value is going down, but that saw is also making us money by saving us how much taxes we have to pay. That's why depreciation is something we all perk up our ears about and want to figure out how to use it to our advantage. You can go as deep into that as you can want to, because also depreciation can have to do, let's say you bought something, you had to finance it, and therefore the interest that you pay on it becomes a depreciable item. It's called amortization, and more terms go forward. But usually with startup businesses, I just told you what you need to know for right now. But how do I know what I can buy that will be depreciating and what will not be? Well, as we buy things, there's two different types of purchases. There's two different types of expenses. One is a general business expense, and the other is a capital expense. And the capital expenses mean that we're going to capitalize it. Capitalizing means we're going to take this thing we're buying and make it into an asset into our business. Assets have to be tangible items. And generally, you don't want to keep up with the paperwork on something that costs you $25 and call it an asset. Things that we use up, like printer paper, telephone bills, travel expenses, vacation expenses, ink, things like that, cleaning expenses, rent, things that are used up and you can't hold on to them, intangible items, they're always going to be a business expense, which means they're going to be a 100% write-off immediately. And a write-off means I'm going to be able to reduce my taxable income by this write-off amount. The capital expenses, we're going to be able to reduce our taxable exposure by the amount on the books of these capital expenses. So business expenses come off right away, not hardly any record keeping to keep up with. Capital expenses of depreciated assets, you're going to keep up with them right to the penny on your depreciation sheet. Part 3, let's talk about the taxes a little bit more. I'm always meeting and talking with accountants on one issue or another, and I always ask them, if it's the first time we met, what is the first thing you want me to say to the entrepreneurs that I had the pleasure of teaching and working with as they're starting their business about taxes? What is rule number one? And you know what? They always answer as if it came right out of the memory book of CPA school. They always say that I recommend to you, learn to pigeonhole, learn to set aside tax money that you're collecting on behalf of the government. Make sure that you've got a system in place in your bookkeeping system or in your checkbook or in your piggy bank so that you're not going to take tax money from a customer and spend it before you send it to the government. And that is easy to do when you're putting all your revenue into one checking account. People get in a lot of trouble doing that. So I want to share this with you, that as you collect tax money, and one way you collect tax money is when you pay payroll out to other people and you hold on to their withholding money, that very second that you call that payroll deduction, that money became money that you owe the government. It's the government's money at that point. So as you're paying salaries, you need to be setting aside and pigeonholing with all the money that's to be withheld for the deductions and employees that have got to be sent in at the end of this week or at the end of this month, depending on what type of system you're set up with. Very serious. So the biggest tax issue that CPAs recommend to me that I share with you as folks getting started in business is take no chances with tax money. Set it aside so when it's due, you can pay it. Because if you can't pay tax money when it's due, it opens up a world of hurt. A lot of questions to be answered, a lot of trust is lost. It could cost you a lot of penalties and interest, and even to the point that the people will padlock your business and take your assets and just flat put you down. And if there's any criminal elements involved, there could be some charges filed against you. So pigeonhole tax money. Take no chances on spending it before it's due. If you get in a bind and you need some extra money to pay your bills, don't use the tax money to do it. You go find some money to borrow or something to sell or create money otherwise, but you keep that tax money where you can pay it when the tax bills are due. Back to the two different kinds of expenses now. The business expenses are things that you're going to use up in the regular conducting of your business. The cost of renting your storefront or travel expenses, paying employees, all of these are just flat deductible general expenses. But your capital expenses all have to do with things usually having a life of 1 year or more. They are tangible items. There are items that you're going to need to keep records on for your depreciation, amortization, and depletion. These items will be subject to inventory on your county tax documents. And for anyone that's thinking about investigating your company's worth for a loan or a vendor or maybe buying it, they'll want to see these assets because you're supposed to keep them in a place that they would be available to be seen. Excuse me. Now, if I was buying a $250 printer, like I've got sitting right here, an HP 4250, cost me about $250. In my business, that'll last me 10 years or more. And in my business, which is small, I need to show that I have some assets. So I would use that $250 printer as a deductible item. I'd keep up with the date I bought it, what the serial number is, and how much it cost me, and I'd start depreciating it. But if I was a large insurance company that had 200 auditors or appraisers out in the field or estimators, and each one of those had a $250 printer, and I got 1,000 of them in the field that I'm having to replace every other year, I would never, as an insurance company, put those little items on my depreciation sheet. I'd be using them up as a general operating expense. And you know what? For me, I'm going to do it one way. The big printing company is doing another way, and that's perfectly fine. You, as the business owner, will have the decision-making authority to either depreciate it or not to depreciate it. It's going to be your option to do, depending on how it suits your particular needs, and that is called tax avoidance. Making the decisions that help you avoid paying as much tax as possible, and that's a good thing. I want you to be real good at tax avoidance. Now, if I was buying a $2,500 or a $5,000 printer in my business and in large businesses as well, I feel assured that they would probably want to call that an asset, put it on the books and start depreciating it because it's going to last a long time. It costs a lot of money. And why not? It's going to make my company be worth more money as well as an asset. But that's my choice to make, because if I've something that large in that way, they may not let me depreciate it in 1 year, or they may tell me I need to depreciate it over a longer period of time, which may or may not suit my particular needs. Therefore, I probably may have the option to lease it, to rent it. And if I rent it, then I'll be able to deduct that rental payment 100%. Take it off my tax exposure. Again, that is tax avoidance. Who's in between renting, leasing, or making a purchase to determine which type of arrangement suits your taxes best. Now, with either one of these, I'd probably go ahead and buy a case of printer paper when I bought them, spend $250 for a case of paper. Now, would that be a capital expense or a general write-off? It would be a general write-off because your papers are going to be used up. It's going to be gone. There's no reason to keep up with that. You just would write that off as a general expense. Maybe it's a $2,000 set of tires. In my business, I would appreciate it because those tires will last me a long time. I would not appreciate, depreciate it. In a trucking company that's got hundreds of trucks, they would definitely just write that off the top, no doubt. A new engine in one of my trucks, I would definitely depreciate it. Spending $17,000, I'd want to hold on to that as an asset because it's still there. It makes my company worth more money, and I can get some tax relief as well. But a big trucking company probably would not even keep up with that type of an expense as a depreciating item. How about if I wanted to rent a used truck while I'm working on mine? No, rental will always be a write-off right now. Payroll, write it off. Professional expenses like for CPAs, write it off. How about a $4,000 set of shop tools? Well, shop tools are going to be around a long time. They'll last for 25 years. Yeah, most people, including me, would save that bill, and I would put it over on my depreciation sheet as a set of tools, and I'd write it off as long as I could. But here's the thing. I give you a little tip. Very few of us will go out and buy a $4,000 set of tools. Well, Steve-O's going to buy $100 this month and $200 next month, and then need something the following month. And over the course of a year, I will probably accumulate bills showing that I bought $4,000 worth of tools. Now, if I could take those tools and put them in a toolbox, excuse me, at the end of the year, I don't put those bills together, put a paper clip in them, and say that's a $4,000 set of tools, and I don't put that on my books and start writing it off and get some tax help on it. See, you've got some flexibility here for tax avoidance, and whether or not you want to keep up with the paperwork and the numbers on them, it's kind of up to you as the owner which way you go. Let's say that I'm renting a forklift. I'm paying $1,000 a month rental on a forklift. And for a lot of years, 30 years or more, I was very large in the forklift business and had hundreds of forklifts out on rent. $1,000, even back then, was a reasonable fee. Is that a capital cost? No. It's rent. You write it off, 100%. How about delivery of that forklift? Same thing. It's intangible, so that'll be written off. But I rented a forklift to some people for 24 months for $1,000 a month. They paid me $24,000 use of that forklift. So they were not buying the forklift, they were paying for the use of it. And that was not an asset for them, it was just a general write-off. But in our rental agreement, I gave them a purchase option after 24 months that they could purchase that machine for $5,000. Now the machine would probably still be worth $20,000 or $19,000, but they could purchase it for $5,000, and they did. Let's say they did. Well, when they purchased it for $5,000, that $24,000 market value machine would go onto their books, could go onto their depreciation file for $5,000. So the book value of the forklift was $5,000. It was a company asset. But the fair market value of that forklift was probably $19,000. Hence, you can see a vast difference in the definitions and the way that you can use fair market value versus book value. And that's a great example of why you should never think that the two are the same. The two are very important for different reasons, but they're not the same. Taxes are just no fun at all. It's not even fun talking about them with me, but it's something that I need to do with you folks, because we have to do it every year, no doubt about it. So what do we need to know as you're starting your business? First of all, I would like for you to find a bookkeeper that understands your business, that has had some experience with folks in your type of business, or feels like they can right away give you good advice on this and that about how to keep your books, like we talked about last night. If you're getting a brand new bookkeeper that's never had any experience in the real world, it's going to be difficult, because you're not going to be in a position to teach them, and they're not going to be in a position to advise you. So I'm saying that's not a good situation. Find someone that has a good familiarity with your type of business. And then hire an accountant or a CPA that's going to help you with your CPA type work. And you don't have to hire a CPA. You can just hire an accountant that can give you the same basic products at the end of the year. However, the CPA is a better trained, better organized, has more obligations, and her work or his work is more respected and accepted by the tax people and by the banks, because of the extra education they have and the obligations that come with having a CPA license. They're obligated by the court, almost as an officer of the court, to be a member of government. When they sign their name on there, they've taken an oath to say that everything about the document that a CPA signs is the truth. And we'll stand up for legal scrutiny, and if legal scrutiny comes, they will probably stand with you. And that's important there. But you want to hire a CPA that is not in cahoots, not the brother, sister, wife, brother, or daddy of your bookkeeper. It's really good to have the two looking over each other's shoulders. Now, some accounting firms offer bookkeeping service and CPA services, and I'm not saying they're going to be wrong, but in my experience with smaller operations like mine through the years, I always wanted to have a CPA that would be a little bit critical of my bookkeeper. Even though she did a wonderful job for me over 50 years, I wanted to hear that criticism so that we can make improvements as we go and that nobody have any hard feelings. Just something to consider. Now, if you don't know who to go to or where to find a bookkeeper or CPA, then your small business center directors know people that have good credentials in your community. I know plenty. Don't hesitate to ask for recommendations, and that means it will be up to you to satisfy yourself that they'll be able to serve you well. But you can get lots of advice on where to find someone good that can help you. A good place to go to is just someone in your community or in your area that's in the same business that you're into. Ask them who to do that. Now, we've got right on board with us tonight Annette Jones, who's one of our associate entrepreneurs that's doing our classes, and Annette is setting up a virtual bookkeeping service. And then I'm sure that she's going to be ready in a short period of time to say, come on, let me help you with your business. I'll do it virtually and be at a very reasonable expense. Annette, let me ask you to turn on your microphone if you're with us. Is that the truth? Would you like for those people to give you a call?
Oh, absolutely.
All right. Well, that's great. Well, thank you for confirming that. So y'all heard it right from the Blessed. The name of the business is Blessed Virtual Accountants. So she's coming from a good place in her heart too. So maybe she'll give you an extra good deal. What's the difference in tax avoidance and tax evasion? Well, most people with any sense in my business would never ever open the subject up like that in a public webinar, but I'm not afraid to, because it's important. Tax avoidance is a darn good thing. Tax evasion is an awful thing, and let's just clear the air. It's legal to avoid taxes as long as you do it in a legal way. The system is all set up, and I gave you just a few minutes ago a lot of examples why you want to take advantage of, with your bookkeeper and with your accountant's blessings, different decisions that you make that will help you pay less taxes. Because if you don't, there's enough ways that people can tax you to eat up every penny you ever hope to make. So you have to be on top of it, not to pay more than you're supposed to. But when you start lying, cheating, misrepresenting, cooking your books in such a way that this is outright fraud, you're going to get in trouble, and that's called tax evasion. Even Al Capone could get by with everything else, but tax evasion put him in prison where he died. So remember, keep it straight. Don't pay any more taxes than you have to, but get good advice from these bookkeepers and accountants. Don't get yourself in a jam. Don't get accused of tax evasion, because it's a big deal and it'll follow you for a lot of years. What are the hot buttons we need to be worried about? Well, we've been talking about the different kinds of expenses, right? And we've been talking about deductions and reductions in taxes. Excuse me. The bottom line after all this conversation is, and we'll all be doing this, it's December now. In less than 30 days, we'll all be getting our stuff together and trying to figure out how many deductions we can take, right? And how many deductions we can take in our personal life and in our business life. Well, related to the small business, these are the items that most of you will ask questions on pretty much every time. What can you do about your home office deduction? Can you get a tax break if you're running your business from your home office? Yes. But the criteria is you'll need to see, if you're operating inside your house, how much space inside your house is being used for office. And that percentage of your total house space can be used as a tax deduction related to your business. Pretty good. Example, and I'll keep it simple. Let's say you've got a 1,000 square foot apartment. And in that 1,000 square foot apartment, you got it laid out with your filing cabinet and your desk and your lamp and your carpet and your place for your customer to sit. You got a 10 by 10 area laid out. That'd be 100 square feet. So 100 square feet out of your 1,000 square feet is 10%. Therefore, you would take all of your expenses related to your apartment, your rent, your roof repair, your grass mowing, your plumbing, your hot water, your cold water, cleaning, painting, repairs, and so forth. And they all add up, all those expenses add up to $10,000 a year. Well, you're going to say, well, I'm using 10% of that space for my office, therefore I've got a 10% of $10,000. I've got a $1,000 office expense deduction for my business. 10%. That's the way it works. Now, if and when you're audited, it may become a little more sticky, because they're going to want to look at the overall picture, make sure that dimensions are about right and your expenses are about right and such as that. But, you know, a lot of officers will say, well, I've got a 1,000 square foot apartment, but half of it is an open room, and that open room is where my office is, so I don't take 50%. So that's going to cause a little conversation. So, but just be ready for that. If you document it and spell it out, you'll be fine. One way that a lot of folks have learned, including me, is more simple than keeping up with the square footage, especially when it's usually not 1,000 square foot I'm working with, is to have an outside building that is your office. And all the expenses related to that office can be easier confined and kept up with. So to do that, you would simply rent, as an individual, rent that building to your company. Have a lease agreement and rent it. And each month the company would pay you rental. And also the company would pay for all the expenses related to that particular business and to your yard, and you get into a lot of gray area there that may give you some advantages that otherwise would be hard to document on the operating inside situation. So having an outside building with a separate lease agreement works out very well, so you can write a check each month and pay yourself rent. That rental payment the company makes to you is a 100% write-off. That rental payment that the company makes to you is taxable to your income, your personal income. But so you can see your income, your tax will go up a little bit, company taxes will go down a little bit, but your record keeping is going to be very easy. How about travel, meals, entertainments, and gifts? Used to be wide open. You could do pretty much anything you could dream of and get by with it many, many years ago, but it's not the case now. You're going to need to document every deduction that you take as to how it was related to your business, have a log to put it in, and keep up with it. Same thing with your car. Driving your car, business mileage needs to be kept up with, and you can be reimbursed. Last time I gave this program, several people mentioned to me there's software that you can buy and use that will help you log in daily everything related to these business expenses. Excuse me, and travel logs. It'll keep up with it daily for you, and at the end of the month, print your report and the annual report as well. So there's items out there available to you with software to make this job a lot easier to keep up with your logs. So do you own the car or the truck, or should the company own the car or the truck? Generally, if you're just going to be doing your business with a regular vehicle, nothing special about it, nothing extra expensive, you're better off as an individual owning your vehicle and letting the company reimburse you for the miles that you use it for company business. And I think today's amount, and it varies from year to year, but I think today's amount is something like 57 cents per mile, somewhere in that range. And let's see, some of you may already know the exact amount. If you do, just go ahead and tell me now. But I think it was around 57 cents, which means that if you drive your car 100 miles on company business, you can go back and the company should write you a check for $57. Now, with gas prices where they are and car prices where they were last year, of course, they're going up. It's been my experience that at that rate, let's see, someone has just said, another class said it was 62 cents or more as it was in the 60s. But at least in the 60s, so it's gone up, and I'll get those numbers for sure. So if you've driven 100 miles and the rate was 62.5 cents, that means you are owed $62. Generally, you can keep and own and make the car payments on a fairly late model car with 36-month payments and pay your expenses for that type of reimbursement. So that's what I have found. But if you've got a specialized vehicle that's very expensive, like you need a big heavy-duty truck or with some special tools on it or apparatuses or trailers that's just not suited for personal use, then your insurance issues and your payment issues, you might be better off for the company to own that vehicle. And then you don't have to keep up with the mileage. The company will just pay all the bills on it. So that's something to consider. Now, rental expenses of all types are generally write-offs related to your business. Anything you pay extra taxes on related to the business will be a write-off. Insurance is a write-off. Training and education expenses and clothes and uniforms. Now, clothes and uniforms can be a little sticky issue for entrepreneurs that's just getting started, but I have to buy certain clothes to do my webinars and such as that, and whatever business that you're going to be in, if you're expected to dress a certain way or to project a certain image and we need to do that, then I suggest that you, excuse me, this is getting intolerable and I really apologize for the coughing. But you'll try to work through this to understand that every year or so, go ahead and buy several nice clothes outfits, got them at one time, get one bill, keep up with that, list it down as uniforms. Because you don't have to dress right to do business right and keep the image up, and whatever you're doing, you'll be wearing out clothes. You don't have to have a uniform with your name on it or a Pepsi-Cola sign or a Coca-Cola sign or some label on it. Clothing expenses for business, I call them uniform, done that for years and never had an issue, never went whole hog and out of the realm with it, but it's the way you can get a good little deduction. Insurance. Most of you guys are young. You're not like me in the later years of your life, but you're younger, and maybe you have children, maybe you have expenses, obligations that you're concerned about, and you need life insurance. You're going into business, maybe creating debt, and you don't want to leave that debt to your heirs. So having a responsible insurance plan is the right thing to do, usually. And the company should pay your life insurance premiums. And the government will allow you to use that payment as a 100% deduction, provided the company is at least a 51% beneficiary. Well, that's okay. How about that other 49%? So the 49% could be going to you or your estate or your children or your wife or wherever you want it to go, but the company's paying 100% of the premium. So that's a definite advantage for you. Now, I'll give you a caveat right now. These are based on laws that change from time to time. So before you go out and sign up with some expensive life insurance policies or annuities or such as that, you want to talk to an independent insurance agent, and I use the term independent because they're going to be representing a lot of companies instead of just one, and be able to give you more answers probably. Another thing I'll mention is that those insurance policies come in a lot of different types. And one of the types is called a policy, a whole life policy. I'm going to refer to it. That indeed is not universal. It's not term life, but it's a whole life. And most of those have a significant but cash value building. In other words, every time you make a payment, it creates a cash value to that policy that goes up as your payments go up, as your payments are made through the years. And over a 15 or 20 year period, that cash value can mount up to right much money. Now, if your company is paying for that policy, that means the company is building up cash value in that policy. Now, the rest of the story is, in some situations that you would want to check out, if you decide in a number of years that you need some money to pay for a child's education or to retire or to make a purchase, or you get in a jam and you just need some money. As owner of your company, you have the right to sign that ownership of that policy over to someone else. And that someone else could be you. And the policy benefits go directly to you. That could be a very interesting situation and a very nice little fringe benefit for owning your own company. So read between the lines. Don't make any major moves unless you get good advice on it. But I'll tell you, that's really helped me a lot through the years from one situation to another, and paying for 12 educations for children can make a big difference. So once your company is in a position to help you buy some insurances, give it serious consideration. Let's talk about those tax preparers and collectors. In just a few months and a few days, we're all going to get our paperwork together and carry it up to our accountant or our tax people and say, how about figuring out how much I owe and when do I need to make my payments? If you take the time to look at each piece of paper and categorize and summarize the different types of expenses and add them up yourself and just put them in columns like X amount of money for utilities, X amount of money for repairs to my car, X amount of money to insurance, X amount of money to telephones, and on and on and on. If you summarize those bills and you carry to your accountant and bookkeeper the summary sheet, you're going to save a lot of money. Because if you carry all the little pieces of paper you've got with different figures on them to the accountant, they're going to pick up each piece of paper and make a note on it and document it, because that's what they do. And if you carry them 100 pieces of paper, there's going to be 100 things there they've documented, which is going to represent part of your bill. So the fewer pieces of paper that you send to them, the less your bill's going to be. Now, I'm going to assure you that Annette and anyone else in the bookkeeping and accounting business, if they need more information, they're going to ask for it, and you're going to need to bring it to them. But don't set yourself up to pay a big bill just for adding up the totals of gasoline prices or advertising costs that you've had. You can total those up as easy as anyone else can. It'll take you a little time, but it'll save you a ton of money. So keep that in mind. Who's going to be collecting this money? You got 4 different groups of folks that's going to take your tax money. And I don't call them all taxes, even they don't call them, some of them permits and licenses and estimates and fees. For this purpose, we'll just say taxes. The city's going to get some of your money, and that's done by the town clerk in your local community. The county's going to get some of your money, and that's done by the folks at the county seat at the tax office. North Carolina state government, or your state government's going to get some of your money. These folks are in Raleigh at the NCDOR. And you may have never heard that term before, but you will in the future. NCDOR. That's the tax agency that collects money for the state of North Carolina. And the U.S. government, of course, that's the U.S. Treasury, uncommonly known as the IRS. We're very lucky in North Carolina to have a DOR organization that is quite friendly to entrepreneurs and new businesses. They go above and beyond to try to help us stay in business and understand what we've got to do and when we got to pay it. Generally, you can call any of the state offices and talk to a human being you can call them by name and call them back if you want to, that individual, and they'll remember who you are. So that's really good. That's a blessing. And in addition to that, the North Carolina Department of Revenues has regional offices all over the state in the major cities that you could actually drive less than 30 miles and sit down at one of them's desks, show them your situations, and they would help you work through it. Get you an appointment first, and all that shut down during COVID, of course. You had to do everything by phone or virtual, but now they're having appointments where you can go see someone and talk to them. And even better than that now, most of your small business centers, your directors there have a personal relationship, or at least knowledge of who in their area is the DOR representative that is most up on the small business issues. So that's a three-pronged positive effort that you can make to be right with NCDOR. I'm very glad to be able to tell you that. Usually your county tax collectors and your city folks are nice folks, but you get into a lot of personalities and such as that may or may not suit you. But the good news is you don't have to talk to those folks often, but NCDOR, you don't have a lot of conversations with them because that's going to be related to your sales taxes and your withholding taxes. Now, at the end of the year, your federal tax returns and state tax returns, then you'll be working with the IRS. The IRS, the federal folks, I'm sure they're great folks that we'd be glad to have them as neighbors. But as far as working with them by email and by telephone and talking with someone directly and getting a straight answer on something and feel comfortable and not like you're talking to someone's got a big stick over your head, I have found it to be reasonable for me to recommend that when you need to talk to the IRS, you need to talk first to your CPA. Let the folks who know how to talk to the tax people, and a lot of your bookkeepers are qualified here as well, and you can talk to your bookkeeper about it, because they know who to call and the way to ask the questions, because these people just use different languages and talk about codes and certain laws and regs and such as that most of us are just not into wanting to know. But if you've got your bookkeeper and your CPA on your team, let them make those calls, because they can ask the questions and get the information without ever mentioning your name. And that's the plus. You don't have to worry about it that way. So just take that. Sometimes it's a good thing to know. I also mentioned that if a CPA is doing your tax returns and you're audited, almost always they will represent you at that audit, and most of the time you may or may not even have to be there. It's kind of like if you have to go to court, you want a good lawyer. But if you have to go to an IRS audit, you want a good accountant to be representing you. So keep that in mind. So, several types of taxes you're going to be concerned about. And in your handout, I've given you the contact information where you can find the people in Raleigh and their telephone numbers. The different types of taxes generally you'll be working with, of course, are your sales tax, withholding tax, privilege, unemployment insurances, and franchise tax. What do you mean franchise tax, Steve? Well, I know you don't own a McDonald's or a Chick-fil-A. I know that you don't own a franchise. Or I kind of feel that's the case, but we are still going to pay a franchise tax to the feds and to the state. It's that little thing at the very bottom of the tax returns on each one of your business returns says franchise tax. And I think with the federal government, it's maybe $150 to $200. With the state government, it's around $100. In other words, they've got a little tax, whether you make any money or not on income-wise, you're still going to pay a little bit of tax, and I think that's just to handle the paperwork, just to pay the postage and the printing. But so when you see that come up, that's what they're talking about. It's a franchise tax, and I like to call it just an excuse they've got to collect some money from you to handle the paperwork. Now, your county taxes get quite interesting now. The state and the feds are interested in how much profit you make to determine how much taxes you owe. Therefore, the more profit you make, the more taxes you owe. But the rest of the sentence is, it's the more profit you make, less the deductions that you can take ends up at a taxable income that is the basis for your taxes. So the more deductions you have, the less taxes you're going to have to pay. Just because you have $1,000 worth of deductions doesn't mean that your tax payment's going to be reduced to $1,000. The $1,000 may be coming off a total tax exposure of $100,000, so you're still going Oh, this is awful. So sorry. Talking about that kind of money gave me the cough. The amount of deductions you have will not equal the amount of tax benefit that you get. The amount of deductions you have lowers your taxable exposure. With the county, they don't care how much you made. They don't care how much you took in. They're not interested in your revenue or expenses. The county is interested in your assets, what you own. And they're going to tax you on what you own. And everything that you own is going to be on that depreciation sheet. So we have come full circle now in our conversations. All those depreciated items go on your financial statement on a sheet that's called your depreciation sheet, where everything is listed down, all your assets. Plus, you don't have other items like cash in the bank and things like that, but the assets that you own are listed there. And those assets is what the county is going to collect their money on. So you can't pay your business county taxes really until your accountant has finished doing your tax return and given you an up-to-date depreciation list. So just keep that in mind, because at the end of the year, you're going to need to be ready, you need to be on the lookout for a piece of mail that's going to come to you that's called a county tax listing. You probably already get one as an individual if you own property, trailers, mobile homes or something, a tax listing statement, where in December they'll send this to you where you fill it out, what you own, and send it back in, and they'll send you a tax bill. This is where you see what they've appraised your property at. You'll get the same type of business type listing from your counties. Now, you're supposed to file that by, I think, December 31st or January 31st, one or the other. But at any rate, if you're late in filing that listing, you're going to be charged a penalty of 10% on the taxes. That can get to be quite big with big businesses. Right now, with most small businesses, it don't add up to a lot, but in time it could. To avoid that penalty, all you have to do is to go online, and every county has got a website now. And you go to the tax department, and when you click on that, go to the business listings, and there'll be a place that you can click to request an extension of your county tax listing for business. And you'll come to a form, and all you have to do is just request an extension and I'll just go ahead and do it to April 15th. And that way, they will automatically approve it, and you don't have to worry about it. And as soon as your accountant gives you your paperwork back, you take your depreciation sheet, fill out that tax form, and you're home free. It's usually just a matter of transferring the numbers from your accountant's depreciation sheet right over to the county tax form, and you're good to go. Next year, those numbers are going to be almost identical except for the things you've added or taken off. Most of us don't add or take off a lot as we go through the years. And all through our years, our tax sheet pretty much looks the same. There's been a lot of stuff that was added on lots of years ago that are still on there now. When you are depreciating your items down and they get down to not worth anything, it's okay to leave them on the depreciation sheet if you've still got them in stock. If you can still claim it as something that you own, even though it's not showing any value on your depreciation sheet, not a bad idea to leave it on there. Why? Because if it comes to a point that you want to sell your business or someone is coming by and making you an offer for it, and they ask to see your tax filings and your depreciation sheet, that's when they'll see that you've still got a lot of stuff there that's not showing any value, book value, but you can still put a price tag on it as fair market value. And that's a very reasonable thing to do, because you just don't want to give away items because the book value is gone, because they may have great worth. Just some words to be thinking about. Now, how do we stay off of the auditor's radar system? That's kind of an important thing to know, isn't it? Well, there's several tips I want to make to you. less than 1% of returns are audited, but as Murphy would have it, it might be mine or yours coming around the corner next year. But the individual things that you can do to keep from putting up red flags to bring the auditors to you is, number one, stay away from shady preparers. Folks that are guaranteeing you a return, then that's trouble. That automatically says to you, keep looking, go on, find somebody else. You want to find a preparer, someone to help you with your taxes that you can get references on and you know about it. Beware, be careful. Don't think you can get by with a lot of unreported income. The tax people know how to find those issues and will nail you on it, so be very careful. If people are giving you gifts or tips or things like that, you can accept a certain amount of gifts from people. There's a $10,000, $15,000, $11,000 limit on folks can give you things that will not affect their taxes or yours. So look into those details if you're concerned about it. Some you would report, but may not cause you to have income. Just keep that in mind. Not filing on time year after year after year after year could be a problem because someone's going to say, what's going on here? But you can always get extensions, but just don't wear that out because that will draw a red flag for you. So now let's talk about our business priorities. More often than not, take it or leave it, it's going to cost you money. We're summarizing our course now. Remember that the raving fan customers are very important to you, and we need to follow up with them after every sale. We need to feed our database daily. Add new email addresses every time we can so we can reach out with our customers as often as we can. Make sure your mobile page looks really good and is really powerful and that you have checked it on a regular basis. That's the page that people see you on their telephone. See your business representation on the telephone. Know what it looks like. Get a My Business at Google account. It's almost like a free website for you. Understand that websites are all about, their value is all about those landing and selling pages at your web pages. Make sure they're working and encouraging people to do business with you. Know the value of testimonials. Have those on your web pages. Know the value of you sending testimonials to other people because that will get them coming back to you. Add all the videos you can. Add all the videos that you can to your web pages because that is 50% of the power for the SEO search engines. Maintain that your values are important, your core values for your company are important, and if you're being the best person you can be, you'll be using your best marketing moments all the time. Now, let's talk about selling just a little bit. This is not Sales 101 or Sales 102. This is Sales 404. We're going to jump over a lot of stuff here that if you haven't had any sales training, maybe you're going to miss. But I want to go right to the heart of the things that I see most people could benefit by changing their ways on a few items that I've noticed through the years. Number one, 3 letters, ABC. And in selling and in thinking about cash flow, we are always thinking about in the back of my mind, what have I got to do to close this sale? What have I got to do to make this happen? One, you have to earn trust. You have to work at earning trust because people aren't going to give you good deals with any profit in them if they don't trust you. It's just a fact. 5 different things that people make big mistakes on. Number one, it's not okay to interrupt a business conversation to take a phone call. Saying, oh, excuse me, I got to take this in the middle of a business conversation is a no-no. Because maybe it don't register with you, but what you're saying to that customer you're talking to is, this phone call is more important to me than you are. And I guarantee you that whatever that phone call is, if it's that important, they'll call you back in just a few minutes, or you can find a way not to interrupt your customers' issues to take a call that is not very important. What is more important than you closing a deal and keeping your company alive with cash flow? I am certain people say that people don't mind me smoking with them. They don't mind my really strong cologne that I think is cool. They don't mind me chewing tobacco and spitting in a cup. They don't mind my dog. That's crazy. When you're bringing foreign issues, odors, facts into someone else's environment, and if that someone else is your customer, you're on thin ice. And they may not throw you out the door even though they'd like to. They might not call you all the names they'd like to call you because they're just better folks than that. But they're not going to buy from you, and they're not going to let you come back. Don't take that chance. If you are a smoker, generally you stink to a lot of people. And I hate to be so blunt about that, but I just see it so often, and I've been in offices when someone came in and the smoke was so heavy on their clothes and on their breath that when they left, the person that was talking with them about buying something said, God, I got to go throw up. It's just unbelievable how strong that effort is. And if you are a smoker, you don't realize it. So think about that very carefully. If I'm stepping on your toes, I'm sorry, but I'm trying to help you be a better salesperson. Do my customers agree with all my political views or all my opinions about sports teams? Heck no. And I sure don't agree with them either. And in today's world, there's hardly in between it all. So leave those discussions out when you're talking about political candidates, especially during the next 24 months. Just leave it aside. Think about your business and how smart you can be. And whether or not the person you think you're talking to, you think you know what they think? Nah. People don't tell you what they think. They'll listen to you and they'll nod and might agree with you just to be polite, make you feel better about yourself. But what's going on in the back of their mind you don't know. Don't take that risk. And even if those people have expressed opinions to you in the past, the person over on the other side of the room or the decision maker they got to work with to make this deal work, they may have 100% different opinion. So be careful how you let your politics ruin your business. Is it okay for me to enter an office when someone else is talking on the phone, even if they're waving me in? It is not. You back out. You don't want to insert yourself into an environment where you're hearing one side of the conversation, because that can go south with just one word being spoken by one side or the other. And you don't want to put your customer on a defensive mode. They will respect you and appreciate the fact that you just say, I'll be there when you're finished. You're showing respect to them by doing that. Coming on in and sitting down and listening to that one side of the conversation you may think's cool, it is not cool. You've entered into a space we don't need to go as a professional salesperson. Don't think that just because you've got business from this individual for year after year after year that the next deal is yours because of y'all's relationship. You can't take it for granted, because there's folks out there that are after the business. There's people out there that are cool and are hungry and are aggressive and are, by golly, going to do whatever it takes to take that business away from you, just like me. So know that you've got competitors out there, and you may not know it yet, but you're going to find out the very minute you start taking an order for granted because you've got a long-term relationship with a customer is the very day that you become less of the professional that I want you to be. You treat each deal like it's gold and each deal like you've got to earn it. Because we do. We have to deserve those deals and that trust people give to us. Urgency. If someone has left you a message, sent you an email, sent you a text message, and you're in business, you need to answer it. You don't need to wait the next week or next month or sometime in the future and be lazy about getting back to someone trying to give you business. Tonight, before I started this webinar, I talked to a customer after I had called him on the phone, and it had a message that was dated back in August, and then it said that his message box was full. Well, I kept calling him back until he finally answered, and I said, listen, you might want to check your message and clear out your old message. He said, oh, I don't worry with that. Everybody that does business with me sends a text. Well, I had to bite my tongue. You can imagine what I was thinking. Are you crazy as hell? Excuse the French. What in the world is going on here? That's crazy. Everybody that wants to do business, you don't know who wants to do business with you, and he's advertising on Facebook with his telephone number, and people who call his telephone number can't leave a message. Is that crazy? So, and on his Facebook page, he doesn't say, send me a text. So there are little things, and he was as honest as he could be, and he was doing what he thought was the right thing, and I didn't have the right to step on his toes and jump on him, however I would if he was paying me to be his counselor. But listen, always be open to somebody trying to give you a little advice that may make a big difference for you. Be on top of your business. Stay on top of it. Let me tell you that when you're trying to sell something, you need to be like the gorilla in the room. That is, you're smart. You know what's available to you, and you're going to do what it takes. So here's some tips for you. Never itemize your quotation or bid more than you have to. Don't give them any more information that is needed, and if you do, don't put dollar values there. You can say, I'm giving you this, 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 and this, but don't put a dollar value out there beside it, because that's the way they'll start picking you apart. Always make every chance you have to sell something a promotion. It is important to you. It's just not c'est la vie. If it comes, it comes. If I don't get it, it's okay. You want every deal, because it's every deal that makes the whole. Never lower your comfort level to mediocrity, not to be excited about taking a big deal and a small deal. Don't ever tell the names of your vendors, your subcontractors, your manufacturers. Never give information away like that, because with the internet now, folks can go to whoever you're buying something from. Those people may be selling direct under a different name, and that is going on big time all over all industries. So don't give away your sources. Don't give them away, because that person may give them directly to your competitor and say, see what you can do. The biggest option right now in closing big deals, the biggest thing that's going to keep you from getting a big contract, a lot of profit, a lot of money in it, is that some people just hate saying, yes, I'll take it. Yes, I'd like to do this deal. They will actually go into connections before they bring themselves to it. They've saved up their money. They've come to a decision. 5 minutes ago, they were ready to go forward with this deal. I'm willing to spend this money, make this obligation. But when it gets right down to the nitty-gritty, a lot of us just fall apart and don't go forward with the deal. Well, my friends, let me tell you, you are the salesman in the room right now, and it's going to be up to you to motivate this person to reach in their pocket and give you your money out of their pocket. It's up to you to motivate them to reach in their pocket and give you your money out of their pocket, because you need the cash flow, my friend. And if you ever say after this night that you're not prepared to do that, no, we're not going to hear it, because I'm going to tell you that you know how to do it. If you'll pay attention right here, we're going to make it happen. Some people will fight saying yes to the point they look like this little girl here with tears in their eyes. I mean, just throw a hissy fit rather than moving on with the deal. You've heard of people going to the car lot and kicking the tires and picking out the car they wanted, but they came home and didn't buy it. Just said, I just couldn't make it happen. Or they went to this house ready to close the deal. And if anyone that's ever been involved in the real estate business knows that deals fall apart at the last minute on the closing table. That's when whatever happens with the buyers, they find a reason to get on out of there. They get afraid, they get shaky. And how does that happen? Who was not in the room when that happened? You were not in the room. You were not in the room knowing how to close a deal. Why is it that probably 90% of all the big deals in the world, all the big sales in the world with billions of monies of profits totaled up, why is it that 90% of all those sales are usually sold by only 10% of the people selling? Because only 10% of the people selling know what I'm going to share with you in just a few minutes. And the rest of them just wonder what happened. Oh, it was not my lucky day. Bull crap. Luck has nothing to do with it. It is sales skills and determination to motivate. Listen to old Steve-O here. He's giving you $1 million tip that's not costing you 1 penny. How do you do it? First of all, your presentation needs to be well prepared and a work of art. Things need to look good and feel good and show that you have put some interest in this, that you haven't been lazy before you got to the table. You've done what it takes to put your best foot forward, and it looks like it and it shows like it. You ever heard of this fellow, L.F. Mesmer? You ever heard of him? He was a doctor back in Austria back in 1734 through 1815. And the old fellow, I don't know if he was an old coot, good-natured or not, but he gave us something really special to the salesperson, and that's the word mesmerize from Dr. Mesmer. What does mesmerize mean, Edna, Toya, Latoya? What does that mean? Annette, what does mesmerize mean? Well, it means to enthrall, to spellbound, to put somebody in a trance, to captivate them, to charm them. Mesmerizing is like when your grandchild is sitting in front of the TV watching SpongeBob SquarePants. I mean, they'll sit there and just be stuck on that TV screen, and you can't move them. Lightning could strike in the house, but SpongeBob has got them, right? That's called being mesmerized. And that's what we have to learn to do when we're trying to close a sale. And it's almost that dramatic, my friend. It is almost that dramatic. As a matter of fact, it is that dramatic. It's just like drama. It's like a stage. And on stages in New York City, things are planned out. They just don't happen because they happen, do they? Those people have practiced and practiced and practiced, and they're pros, and they get it just right. It's like the very best preacher that you've ever been to. It's like the preacher that I went to that convinced me I needed to get baptized a few months ago. It's like the preacher that told Tim, by golly, it's the right thing to do. If you really want to know what it's like to be baptized, you need to be dunked under the water. Well, I agree with that. That was good advice. I mean, I listened to him in that lesson, and preachers know how to get the message right, get the choir singing just the right music, right? I mean, they know how to get the tone right down, and the organist knows when to chime in when that special message is coming across, and the preacher knows how to get those hand signals going and get his voice going down. It's all about the drama. It's all about the drama. And in sales, in the big league, right down at the bottom line, it's all about the drama. What are you going to do? What are you going to do? Well, let me make it simple. Listen to me. Ruthie, are you plugged in here? It's selling a deal, is getting everything ready and all your paperwork done and having everything like a work of art. But that doesn't mean that person on the other side of the table is ready to buy just because you're ready to sell. That doesn't mean they're ready to buy. And even if they are ready, they can't bring themselves to say, yes, I'll take it. So that is a major effort. It's like the aha moment with the baby. And we'll hold that baby, that young child, that infant, and they're crying their heart out at 2 o'clock in the morning and 3 o'clock in the morning. They've been crying since 4 o'clock in the afternoon, and you are wore out. But they're just getting started. You are wore out. Your hips are breaking because you have rocked them on your hips a bit. You're out of gas because you rode them around the block 50 times, hoping that would get them to go to sleep. But they keep crying. They're just getting started. And they just, man, how does a little thing like that make that much noise forever and ever? But then there will be a moment that comes when they look up at you, they take that three-pointed smile and look up at you, and they go, and you know at that point in time, that's the aha moment, because they have given up. They have decided there's really nothing for me to cry about. I think I'm through fine. I'm just going to accept this thing and go on to sleep. That's the aha moment. And in sales, that's the aha moment you need to be looking out for, because it's time right then to stop selling and start closing. Because it's time for you to move into letting them know that they can trust you, that they need to like you, that they're getting a really good deal, and you remind them of that, and you start using your hand motions and shaking your head up and down like this, and really looking into their eyes and maybe lowering your voice down and get them to listen even closer to what you're saying. Let them know that this is a good price value, and you can be so comfortable with the warranty of this product because it's so good. And you know what? You'll use these silent moments, and then they'll listen to your words. And you shake your head like this and do like this, and in just a moment, you've got their attention. You are mesmerizing them, and when you will notice, if you're working hard and you're good at this, as you're moving your hands back and forth and shaking your head as you're pleading your case like a good lawyer in a courtroom or a good preacher in the sanctuary, that you'll notice that their head starts going like this too. They're agreeing with you like that. Aha! Because when that happens, it's time for you to extend your hand forward and shake hands, or extend your hand forward and say, just initial this right here, or just give me the nod and I'll move forward with this deal. What you want to do is to have them to breathe easy long enough to let those anxieties go. Because once they do, and you know what you're doing, they will buy what you're selling. And they will not have to say, yes, I'll take it. And you have done them such a great favor because you know what you've done and they know what you've done, but you never have to talk about it. Your sales techniques will be all the difference in your sales success. Whether you're selling legal Zoom ideas or whether you're selling your contract to do your accounting business in it, or Edna, whether you're getting someone to move forward with a deal with you, or Latoya, it's all about you believing in what you're offering this customer to the point that they believe it too. And that you understand the anxieties that people have that might make them want to wait. And you are ready and prepared and practiced in finding that aha moment and closing the deal. Oh my gracious, it's a happy moment, and you'll be so happy that you did. I want to congratulate you for hanging in here for 6 consecutive weeks, making these classes help you and your business move forward. And what we're going to remember is the endurance you find to stay in a course like you have here is the same type of endurance that you need to stay in the race. Staying in the race is the way you win the race in entrepreneurship. Staying on the journey and seeing it through is the way you win. Because every day that you stay in the business, you learn new things, you find new values, you find ways to embrace excellence, to foster partnerships and such as that. Being the best person you can be by lighting your candle and letting other people see it and be warmed by it and led in the right direction is the way we better serve. God bless you. God bless your business, every single one of you. I look so forward to hearing from you. Send me your homework. Send me your quizzes. Send me some videos. And we'll close out this course with Ruthie, and we'll be planning to start us another one next spring. And I know I want you all to come back and learn more as we do that. Let me invite you to turn your mics on, give me any comments that you have, or ask any questions. Thank you so much.
Steve, this is Regina. I was just saying thank you for praying for my dad. He's doing a whole lot better. He's pretty much as old stuff he is.
I am so glad to hear. I've been worried about that. We all have, and thank you for calling and letting us know. That's a good Christmas present for you.
I've been on one. I heard you when you said it, and I've been listening to you. I was walking around the store and listening to you at the same time.
How about that? Well, give him our very best, and we look forward to hearing from you as well. And good luck with your design business.
Thank you.
All right, Regina, thank you. Tim, you have some words of wisdom?
Yes, of course. One of the things one of our mentors used to say, when you're closing, put people into action. Like when we're signing the contract, if it's a husband and wife, he'll say, Bill, give me the Social Security number, and you go get the checkbook. And what he says is if Bill starts giving that Social Security number, Mary's going to go get the checkbook, and vice versa. If she goes get the checkbook, then Bill is going to give that Social Security number. So he's like, you've got to put people into action.
I like that. Do you care if I use that in my presentation? Oh, that's a good idea. That's a good idea. Gets their mind off of thinking and puts them into action, right?
Yes, sir.
All right. Thank you, Tim. I like that. Anyone else? Okay. Well, thank you all so very much. Congratulations on finishing out the first course. Tomorrow night, we'll be finishing out another course that we've been working on for 5 weeks, and I hope we'll see you there too. I'll be creating a test for it sometime tomorrow, and maybe you can all earn some certificates and just plaster your wall with them. We'll print as many as we can take.
All right.
So glad to have you. All right. Well, good night, and God bless you all. Take it to the Lord in prayer, and things will get better. Good night, everybody.
Good night,
everybody.
Good night.
Good night, everyone.
Good night, everybody.
I'll be emailing you, Steve.
All right. Take care.